Okay, so this is just a quick recap video of last week with the power trade indicator. Um, I get questions every once in a while of how it did through the week, so we're actually going to look at it on its main setting. So basically, the indicator is set up out of the box to watch the 15-minute time frame, the 1-hour time frame, and the 4-hour time frame. And then we take trades on the 3-minute or 5-minute time frame. Why is it watching the 15-minute, the 1-hour, and the 4-hour? Because those are higher time frames, and we need to be aware of where changes in those time frames happen. And also, we're taking trades when everything syncs up. So when things sync up, it's very powerful. Typically, we get very powerful moves, and we want to be aware of when that happens, when all the time frames, all four, basically the three higher ones and our lower time frame, basically when things sync up. So it does give buy and sell signals. And I'm just going to skim down through the charts. Okay, so first we have Bitcoin. I've kind of shrunk my chart in a little bit so you could see to the left, so my video was, my head isn't in the way. So the time frames we've marked here, or I've marked in the vertical lines, are 7:30, because this is typically when I'm back looking to get into trades. When I'm back home, I leave early in the morning at 7. I get back about 7:30. So 7:30 is when I start to look, sometimes before that, but 7:30, so before 8. And then we have a vertical line here at 9:30 a.m. That's when the stock market opens, okay? And then we have 11 o'clock here. That's when you need to start thinking about possibly closing down for the day. We're not looking at trading all day long. We don't want to give back profits that we make in the morning in the afternoon. There's no need to sit here all day long. And then I've marked 12 o'clock as well over here. And 12 o'clock is when you definitely need to shut down, get away from the computer. So we're only looking to trade, a few hours in the morning, whether it be, you come in at 7:30 or you come in before 9:30. I wouldn't wait till 9:30, but some people do. They wait till the stock market's over and then try and get in. So I'm just going to skim down through everything and kind of show you the chart. So here's Bitcoin. We had nothing but buy signals. Now the buy signals come about, buy and sell signals come about when everything lines back up. Again, the lower bars down here have basically 3 time frames. The lowest bar down here, lowest dots, set of dots, that's 4-hour. The middle is 1 hour, and the top is 15 minutes. So you'll see the top, the 15-minute one, fall out of sync for a while during a pullback. Okay, so we get a pull down. You'll see everything, the 15-minute go to red. And we know it's pulling back. We're on the 3-minute time frame. We can see that. But it's telling us that, hey, the 15-minute also is pulling back. Well, it's kind of a no-brainer. It's because of these candles right here that are pulling back. So we're on a 3-minute. We'll multiply it times 5. You have a 5-minute candle. 15-minute candle, and that's why we're getting red. So when everything goes back green, that's when you get the signals to buy back in. Okay, so there were several opportunities to buy. This was Friday. Here's gold, several opportunities to buy. Now again, we're looking in the morning. Now, even though I changed charts, I didn't go through and mark the time frame here, the vertical lines on every chart. But when I switch down to the next chart, it is the same time frame. We have over here 7:30. If you look at the bottom down here, okay, if I hold my arrow there, we're around 7:30 there. All the way over to the right, if you look down at the bottom, we're around noon. Okay, so it's that time frame between 7:30 and noon. Okay, it's just I didn't mark with vertical lines. So here's gold. So gold had a buy signal in here. That was about 7:42. If you missed it, it had another one here. Now we typically will close partials. So we're letting it run up. We're closing partial and we're leaving a runner on. And a lot of people move their stop to break even. Some will leave it out and move your stop to a halfway point. So if you get in on a buy, say you put your stop back here, it goes up and you close out partial at 1-to-1, you might move your stop to halfway point to where you got in, or you can move to break even. You'd have been stopped out over here to break even. We're not really interested in trading over here. This is later in the day. Again, that is after 11:30. So here's 11:30, okay? And we have several signals come up at 11:30 or after 11:30 or 11, sorry. So there's 11, right? And we're not really looking at taking trades after 11. We're more interested in monitoring our trades, okay? Moving our stop loss, closing extra partials. You may put on 10 contracts over here or here. Let's say you put on 10. You may close out 8. And so you may want to close out one more over in here because you see it come up and it's just not, breaking those highs. So this is more for not getting in trades, because we know in the afternoons what happens. In the afternoons, a lot of times things settle. Now, some afternoons things will take off and just keep on going, and that's great because we have a runner on. We're not looking at taking reversals. We're not really looking at taking any new trades in here. It's just getting in the market, again, between, for me, 7:30 and basically 11 to get into trades. After that, it's just monitoring your trade. Every once in a while, stepping away from the computer. You can check it on the phone. You can just adjust your stop loss. You can set on alerts and adjust your stop loss when targets are hit. Okay, so here is this is silver. We got a few people trading silver. Again, a buy. This buy had a pullback, a deep one, which you might have been taken out on depending on where you put your stop. And then we had a buy in here, but that again is after 11 o'clock, so you wouldn't buy in there. As long as you're closing partials, these two trades would have been winners. If you got in on this one and had your stop obviously here or in here, you were taken out. So you might have had a loss on that one. This is platinum. So platinum, very strong move up. We had a buy here. Again, after 7:30, we had a buy here that is at 9:30, right when the U.S. stock market opened. Powerful, strong, good move up without any real decent pullbacks. This was a little pullback. This one's a decent pullback. Depending on how you moved your stops, you'd still be in over here. Again, we're looking at those two buys. We're not looking at this one. That is after, again, 11 o'clock. Okay, so basically we're looking at trading right to there. That's 11 o'clock. And here we're monitoring. So here after 11, we're going to monitor our trade. That buy pops up. What do? Well, we say, okay, I'm going to stay in the trade. I'm going to hold. I have another buy signal. Let's hold and see if this thing keeps going. Here's NASDAQ, buy signal, and buy signal. Now, this buy signal here, taking it is before 11. You'd have your stop below that wick. This buy signal here, you'd take it. You'd have your stop below that wick. So you're not wicked out. You're closing partial on this move up. This one, you're closing partial on this move up. And then you're moving your stop. If it's to a break-even point, well, then you'd be stopped down on this pullback. If this one the same, if you bought, and when you buy, when this signal comes up, it comes up at the close of the candle before. So we're not getting in on this wick way up here, okay? The buy signal comes up at the close of that candle. So we're getting in on that. And then again, we're closing partial. If you have your stop and leave it where it is, your stop's down here. So some people will take their stop and they will move it to, let me draw a stop in here. So this would be your stop. Let's just put one in here. So we'll put a stop marker in here. Okay. So again, if you're getting in on this buy right here, your stop would be below this low. It moves up. You're going to close partial. So you put on 10 contracts, you close 8, you have 2 runners on. It's up to you whether you do this and move your stop halfway to break even, or if you move your stop to a break even point. If you move your stop to a break even point, you didn't lose anything on the runners. You were stopped to break even, but then you're missing out on the potential here, okay, to ride that. So it's up to you to decide where your stop management is. On this one here, you're going to buy your stop there, move it to break even. Yes, you're taking out on that pullback, okay? If you move it to the halfway point, you were still taking out on this pullback. This one over here, I'd have to pull the charts back to the left to see more where the previous low is. So you have a buy here. Putting it at this low right here is pretty tight, okay? And that's more of a scalping move. That's more if you're down on a 15-second chart or a 30-second chart, or even a 1 minute. That is a tight stop loss. That's when you're pulling partials like very quickly, and that's where your stop is. And you would have pulled some as it moved up, basically a 1-to-1 level of where your stop is, because there's your entry. You would have been stopped down on that. So if we scrolled to the left, there would be a previous low, and you would have the stop at that previous low. You would not be stopped out. But again, I want to keep my charts centered at that 7:30 mark. So here is S&P, a buy signal. Your stop would be down here. Okay, it went up a little bit. You might not have taken profit there. You might have rode through, had another buy signal, said, okay, I'm going to hold, and rode it. And then all of a sudden it popped up, and there you're closing partial and moving your stop, say, to break even. Your stop would be, if your stop was down here, which again is a pretty tight one. I know I'm getting into a little more trading than I wanted. This was more just to be covering over what happened. Where's my stop marker? So there's stop marker. Again, get in at tight stop. So you would look to the left, see if there's a lower low, and then you would ride that out. And then when it pops up here, you're going to close partial. There's a 4-hour level. Good place to close partial, right? So you could have got in with 10 contracts and had an 8 contract sell limit up here. So when the price popped up, it would have closed out 8 of the 10 contracts for you, and then you would modify your stop to 2 contracts and move it. Whether you move it to a break-even point, you'd still be in on all this. All right, this buy signal comes up, you hold. You're going to hold with that. You're going to say, okay, I'm gonna still hold. That doesn't mean it won't pull back further. It just means the 15-minute briefly came back in line. For 15 minutes, it was out of sync. So for 15 minutes, the 15-minute time frame was out of sync from the 60-minute 4-hour. Why? Well, it's because of that pullback. All those red candles right there on our 3-minute chart, that's the 15-minute being out of sync or going out of sync. And then it quickly fell back in line the next 3-minute candle. So we're not waiting the whole 15 minutes before we get a signal. It's going to signal ahead of time. So you could take this buy if you didn't take either of the others, because it is before 11 o'clock. Okay. On to the next, Dow Jones. They all popped up, guys. So we would have taken a buy. Again, it's kind of a no-brainer on these for Friday, and we're going to start going over these on a daily basis in the afternoon. But there was another buy. So you better have bought. And that was, of course, before 9:30. So you could have been in these before 9:30. 9:30 candle is this long green one right here. Okay, so that's you getting in before the U.S. stock market. If you can get in ahead of the game, you're not chasing it. Okay, so if you would take these buys, then when the U.S. stock market opens, it shoots up for you. Well, you're closing partial. Where would you have got in? Okay, where would you have placed your stop, and where would you have placed your entry? Well, for one, your stop should be down here below that 4-hour. Okay, that's going to be your stop marker. Stop marker down here below a 4-hour. That's a 4-hour support and resistance level. These are all drawn out on Sunday. Okay, we do that over the weekend, Saturday and Sunday. We draw the 4-hour support and resistance levels. We also draw all-time high zones, which is this red one right here. Okay, so again, our stop would be below, it better be below the 4-hour support and resistance level, because that might be tested. Okay, where's your first take profit? Well, a take profit would be in front of this one right here. Okay, so we'd have a target right here before the 4-hour line, before the 4-hour support and resistance level. Where would we have a second target? Well, we'd have a second target right here. Okay, so that's you scaling out. You can scale out because, you know, a lot of times it'll go up, tap an area, and reverse. It may not go any further. So what I like to do, again, is go in with 10 contracts, put up here at your first take profit level a sell order for 8. You're going to sell 8 contracts, sell limit order 8 contracts. So again, it pops up. It's going to close out 8 contracts of your 10. shift your stop to a break-even level or a little profit if you want, because it is a strong move up. So let's just say you move it to a break-even. Okay, it climbs, it breaks the 4-hour level. You can scale your stop if you want, or trail your stop if you want. Irregardless, up here, you could have had a sell limit of 1 contract. It's before the 4-hour level. They don't always break these levels. So the fact that they don't always break them, be willing to close out partials before. So you would have closed out 8 here, closed out 1 here, and you have 1 runner on that you're trailing the stop the rest of the day. Okay. This is Russell. Again, same thing before the 9:30 bell. We have 2 buy signals, so you would have bought off those. There is a 4-hour line, support and resistance level that's close. Of course, your stop would be down here. So your stop would be at least down here somewhere, or possibly lower if you look back to the left. Okay. And notice how it tapped that support resistance level and hung out there for a while. Really respected that. I'm not going to count the candles, but from 8:18, where it tapped that, to 9:27, right before the U.S. stock market, it just hung out below that 4-hour support and resistance line. So that's what I like seeing, guys. I love seeing that. When I drew this 4-hour support and resistance level, it was not on Friday. It was from the week before on Saturday. So drew it on a Saturday and drew this one on a Saturday. And look at how it came up and just stayed under it, respected it. It popped up here, stayed under it for a bit before moving on. That's what I love seeing. I love seeing that, knowing, hey, my price is right. I put that price level there, and it's not magic. It's just based off of our 4-hour time frames. So the 4-hour support and resistance levels are drawn off of 4-hour swing highs and lows. We're identifying those levels at potential points that the market may turn. Why? Why the 4-hour? Because we're down here, retail traders are typically down on the lower time frame. The market movers aren't. They have prices determined, predetermined prices in their mind, in their algorithms, where they want to buy and sell. If you look at the 4-hour time frame or even the daily, you watch where things turn. Those turning points are the points you want to mark. So it hung out, and then the 9:30 candle with the U.S. stock market open just shot up. Again, you would have had some take profit levels in there, and then could have trailed your stop. So this initial push up, you could have closed out 8 of the 10, moved your stop to break even, and then as it makes these lows, so it makes a low in here, goes up, makes a higher high, you pull your stop up. You don't go right to the tick. I never go right to that low. We always give it a little extra room. It pulls back, goes up, does not make a new high. So it comes down until it makes a new high. We don't move our stop up. So over here, this high, these highs were pretty much right there at the same level. So we're still not moving our stop. And then after this pull back and bounce, well, now it goes up to break this high right here. Okay. So that's something you have to get used to. You have to write out this back and forth where it goes. We're always marking our highs to break and our lows to break and watching, and we're not moving our stop until the highs broke in this case when we're bullish. So once it comes up here and breaks this high back here that we marked, okay, once it breaks that, well, then at that point we move our stop. We're not moving it much. We're moving it under this low in case that low's tested. To come up in here is kind of asking to be stopped out. But again, it depends on you. Everybody's a little different. I like giving it the extra room. And yes, that means if it comes back down and it stops me out, I'm going to lose out on some profit that I'm up right here. Okay. Again, you might have closed one more here. Once it goes through the 4-hour support and resistance level and comes up here, it's basically broken this high. What do? Well, we move our stop up. Okay. We trail our stop. And that's how you want to do that. Here we get into currency pairs. So currency pairs, a buy signal in the morning, that quickly moved up. You're closing partial, moving your stop to break even, trailing your runner. If you're trailing your runner, more than likely, you're stopped out on this pullback. Again, do you take this other buy? That buy was at 10:45. So you might have taken that buy. It depends. Again, how close do you trade till 11? For me, I like taking trades up until 11, 11:15, but normally by 11, I like to kind of scale back. So before 11, I'm typically trading at least 4 instruments in the morning, and then I start to let them fall off. Meaning, if something's running, let me go back here. If something's running like this and hasn't pulled back, then I might stay in those. Okay, I'll stay in those. If something pulls back like this, if I trail my stop up, okay, stop initial, get in here. Wish there was a way just to have a stop marker on here, Mark. So stop there, you trail it up, and it keeps going up. It breaks the low, so it comes up here, pulls back a little. This candle right here breaks that high. Well, then you're going to move your stop up. So I'm doing it more realistic to trade how I trade, right? Because this candle broke those highs. So it goes on up, and there's no pullback. So this going on up, and basically when it starts to pull back here, well, that's where you might move your stop a little on the aggressive move. If you leave it here, well, then, of course, I'm stopped out there. If you moved your stop kind of aggressive, well, then you'd be stopped down on this pullback. Either or, okay? So let's say I didn't move my stop. This is all I made from there to there. I missed out on this because I didn't have any more runners to close. Had one runner on left. It came back, stopped out my runner. Do I get into this? Again, if I'm trading 4 instruments, I'm going to let my winners run, and I may not get into trades closer to 11 o'clock. I don't have to. Why would I have to if you've gotten in several of these other trades? Okay? So you're trading the instruments you want to trade. Again, I like 4. Sometimes I'll trade 6, but if I'm down on the lower time frame, 1 minute or 15 second, I don't trade 6 instruments on 15-second time frame. 4 is my max. So here is the British pound. Buy, 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 buy. You see it went up. And this is the Canadian dollar. We had a buyback here. That was actually right at 7:30. Okay. I'll draw a line so you can see it. But that price point right there, if you look below the mouse, it says 7:30 when I hover over. So that was right at 7:30. So you would have bought. Would you buy over here? That one comes up at, again, 6:45, I believe. Yeah, 6:45 it was. So again, kind of the same thing with this one. Do you need to be greedy and try and capture the other? How much are you trying to make per day? This all boils back to decisions that you should make before you even drop down to the charts and trade. And I go over this several times with a lot of people. It's you need to decide how much money you need to make per day, and you need to stick to the plan. Okay? If it's $100 per day or $200 per day, quit when you make that. That may be the first 2 hours of the market open. Stop. If you want to watch the market and see what happens after that, just don't trade. Log out of your real account. Log into a paper account. That's one way to do it. If you're trading on Top Step and some of the other firms, you can lock yourself out. So you would lock yourself out for the day, where you can't place another trade till later on in the day. That's another way to do it. Again, I've told other people that don't have a lockout feature with their broker, trade during the morning, make your money on your real account, and then if you kind of want to see what happens the rest of the day, but you might get tempted to jump in, if that's you, log out of the real account, log into a paper account. Okay? So do you take that trade or not? If I've already made my money for the day, you don't need to do this. You can walk away early. It's a novel idea, right? Walk away at 10, 9:30, 10, 10:30, when you've gotten your money. Here's the Australian dollar. Again, several buys. New Zealand dollar, we had a buy. That was right at 7:30. Yeah, 7:30 buy. This one here came at 10:39. Are you buying on this one? Okay. Or if you're looking at that, did you miss out? Typically, we've already bought in here, guys. We're already buying down in here. Now, this is the yen. It was a little messy. So the yen, we had several sell signals here after a fall. So it fell during, and I'm not going to scroll over, but it fell during the London session. So we had several sell signals still for continuation that didn't fall through. And then we had a reverse. So this was kind of a nasty day on the yen. So bad signals on the yen. And we're typically, I don't trade that in the morning. So if I'm going to trade the Japanese yen, it's typically in the evening. Even though the Kiwi went bye-bye and we followed through, a lot of times that's in the evening for me. Same with the Australian dollar, in the evening for me. Now the Canadian dollar, I will trade it in the morning, Eastern Standard Time. Why? Because their markets are open when our markets are open. They're the same. Okay, so we're looking at that 7:30 a.m. to 11 a.m. and that's it. So yes, I would have traded the Canadian dollar, the British pound, and the euro dollar. Those would be the three. So I hope you like the recap on this. I just kind of wanted to go over how they did last Friday, and I'll get this posted so you can see it. And that's what we're looking for. We're just looking to get in and trade from 7:30 a.m. or around there. Some people come into the charts and they're trading at 6 a.m., or 7 a.m. We've got some people that come in, and yes, they're on a different time zone or they have work, okay? So some are out in California. I forget who's in California, but one trader is out in California. So she gets up a little early before work and will place trades then, because she can have that time before she has to get her kids up and get going. So that's her time that she trades. So our time, Eastern, she's actually up trading a little before that, I believe. So I believe it's the 7 a.m. mark for that one. So basically, that's what we're looking to do. We're only looking to take trades, the buy and sell signals, in the morning. Scalping is 100% different, and that's something that if you do decide you want to scalp, I've been doing it lately on a 15-second chart, and that's in and out. You better stop in half an hour. So that's something you should decide ahead of time. Like, I'm only going to trade for an hour, and I'm going to drop down to a 15-second chart, and if I take 2 losses, I'm done. You tried, you had 2 losses, you get what you get, you don't throw a fit, and you're done. This is a more relaxed trading strategy here. You get the signals, you trade the signals. It's a 3-minute time frame. You're watching the structure. You're watching things move. You're watching for the pullbacks. And when you get a pullback, you're watching for it to turn and extend past the previous, in the screen case here on the euro dollar. You're watching this first one. You're watching it to extend past. So you get a move up like this green candle here. It extends past this high. So on an extension, a run up, you move your stop. Okay, you'd move your stop to break even, let's say. So again, it runs up. It gets a pullback. What do we do when we get a pullback? When you get a pullback, you mark that high. Okay, you mark that high. We don't do anything with our stop yet. We mark the high. When it runs past that high, we get an extension. As it's moving up, we move our stop. Okay, it pulls up. What does it do here? It starts moving sideways. Okay, we treat it like a pullback. We mark the high. We don't do anything on this wick up. We don't consider that a break. We're watching 3-minute candles. We need a candle to close above this high. Okay, so we haven't done anything with our stop. Then right here, this candle moves up and it stops past the high. What's it done? It's extended past the previous high. Move your stop. Where do we move it? Well, we're going to move it. Move the whole chart here. We're going to move it under this low right here. Okay, and that's where it would be. And then when it pushes up here, we're marking the high. Which high are we marking? We're marking the first one. So green candle, green candle, green candle. We have a red candle. We get a red candle, let's mark that high. This wick, it goes through, but the candle does not close above. So we can't say that it's extended past. It's just a wick run up through. Price went and extended past it for a moment, but the candle did not close. We're watching candles. A red candle, green candles down. We're starting to see structure build up for a short. Okay, comes back up to test that. If you're on a 1 minute, you would actually see a nice pullback and then push. So I would be, if you're leaving your stop, you're stopped out here on your runner, not the full trade. The full trade, you're putting on 10 contracts and you're closing 8 in here and you're letting a runner run. So that might be your runner. Some people on this steep climb, and I've done that before, if it starts getting a steep climb, you know what? It's going to be over soon. So if you trailed your stop up, depending on how you follow it, 1 candle or 2 candles back, you're stopped up in there somewhere. So again, the stop placement, the stop movement is based up to every trader to decide that. Okay. So I hope you enjoyed the video, and I look forward to being on tomorrow.